Okay, welcome everyone. We're going to keep this video pretty short. We're going to go through the stock market technical analysis, look at a couple trade ideas that I pointed out recently, see if there's anything interesting. And again, this week is a pretty light holiday week, so you're going to want to keep your positions light. You just don't have a whole lot of liquidity this week. It's pretty low volume, so let's look at the triple Qs. We are rallying. So again, we talked about this, how I covered my shorts the other day on the 20th of December and pretty much haven't really initiated too many, no indices shorts really, except I did just take a shot at it this morning or today basically. And let me show you what I've got. So you look at the hourly chart here. We've got this downtrend line from the all-time highs that we basically have been getting rejected on. That was pretty much a rejection. There's another one right there. And we're right there. We're right at that trend line right now. So this is an objective area to short at. Doesn't mean it's going to work out, but it does mean that it's the area where you would want to short. You want to short as you rally into resistance. And, just set a stop somewhere above, just probably stop slightly above there. Maybe 394.50 or something like that. Give it room. They might want to pop it just briefly. But if they pop it and they can hold it, then it's likely going to run up to this key level all the way up here at 488. So whether you want to, ride that up or not, I prefer not to. And I'll probably just stop out with a stop slightly above that trend line. Okay. So that's what I see. Pretty objective area to take a short. Maybe we, have another thrust down on the downside. Okay, next on the SPY. The SPY looks a little different. We don't really have that downward line. We kind of have this big sideways range basically. And it's just not really objective for any trade here. Maybe if we go a little higher up to this 470.85. That could be an area that we get rejected at. I just don't see much here. So in general, I'm just really focused on the triple Qs. Other than that, that's really what we're watching. If the Qs breaks out, SPY is likely going to continue higher as well. Okay, moving on. Gold bullion. So again, gold hasn't been doing anything for pretty much months, since about June. Just a big sideways chop fest. You can see we've just been moving all over. We did have, we've got this range, and the range is really, let me mark it out. This is really the range. I just marked that out. It's about right there, and with the bottom of the range being at about 1756, and then the top of the range about 1833. We had two false breakdowns and one false breakout. So lots of chop. They're really trying to move people out of this trade, it looks like. But you can see there's a false breakdown, it recovered. There's another one, it recovered, and here's a false breakout, and it failed. So big chop fest. It's really just frustrating traders. But in general, we are holding this range, and going back, let me clean my chart up a little bit. In general, as I roll out, we're still holding that bullish trend. Going back to August 18. So each tag of the trend line, we're still holding. And we're holding right there too. So as far as I can tell, we're just in a continued bull market. It's going to grind higher. And that's usually a sustainable bull market. It just grinds higher over time. You don't want to see this thing just go parabolic straight up. That's usually the end of the move. So typically, bull markets can be stealthy, where they just climb the wall of worry and they just kind of continue to grind higher over time, making small incremental moves higher. And that's what it looks like we're going to do on our next leg, just to make our next leg higher. And then we'll start to get more impulsive and more parabolic as we continue that move to the upside. So I don't see any reason to get out of this. Still looks good to me. Okay, so commodities, ag commodities are looking good today. Soybeans having a little breakout today. So our former highs right here were at about 22.36. You can see today we're gapping up and so far holding above that level right here at 22.59. So if this can hold, then I think soybeans looks good for a move pretty much to the all-time highs, 24.83 right up there. Sorry, this is not the all-time highs, but the most recent high is right up there. So as far as I can tell, that's looking good so far. And we still have another, 10% upside on this trade. So I like it. Looks good to me. Again, this one came with bullish divergence. So you'll see here we're building bullish momentum on the RSI and the PPO. And each new low here was a divergent low. We were waiting for a break of the downward trend line. That break came right here. And so that was your initial entry. And then you could add on the back test right here. And yeah, for the move to the upside. So looking good there. Okay, I threw out a couple trade ideas yesterday. Let's look at those. AA, Alcoa. Yeah, kind of a counter trend, counter inflation trade, because Alcoa is I think they do steel or aluminum. And that's, they're a commodity manufacturer. We were trading right into resistance yesterday. And so I took the position right there, basically. Gapped up today and started to pretty much move impulsively. I stopped out on the trade right there at about 57.93. Small loss. Again, you never know. You can't be right on all the trades. So about a 3.5% loss on that one. And, that's just part of the risk management. You're not going to be right on all your trades. Nobody's 100% right on all the trades. It was objective to short right here. We had negative divergence that had been building for a while. We were trading right into resistance, and that's basically the area that looks like a good short. But they don't always work out, and that's why you want to take these trades at key levels, like right at resistance. So if you're wrong, you're wrong pretty quick, and you're wrong small, and you can get out and move on. And that's what I've done on this one. So this one's pretty much showing pretty good strength today. Not a lot of volume, really low volume today, but still holding above. Now it is a divergent high. We are making kind of a new high right here, and it is, it's part of the bigger divergence. It's just a new divergent high, but it's not confirmed. So if we continue to go up, we'll burn through these divergences. And also the other thing that's going on is recovering this trend line right here, this upward price channel. Broke down, but we're pretty much recovering it pretty impulsively. So unless I see a break of another breakdown of this level, then we got to take that as a recovery of that support line. And that's what I'll look for. If you get the break back below this trend line, then that would be your sell signal. But until then, you better just to stay off this one. The other one, MGM. This one is kind of doing the same thing. They were both very similar trade setups. Clear negative divergence, and basically, let me just kind of scroll that out. So this was your last divergent high right there, and right at resistance. And yeah, it worked out for a pretty good short from that divergent high. Sold down about 25%. We backtested into resistance once. We're backtesting it again. Now we're above it there today. The day's not over. We'll see how this thing closes out. I'm going to give this one a little bit of room. And we'll see how we close out. But ultimately, it's at resistance, slightly recovering it. If they can close and recover this trend line and get a daily close above here, see that trend line right there, then we'll probably just stop out. And then, again, same thing. You look for another break or a gap down as your next sell signal down below that trend line. And if you don't get it, then we've recovered this support channel, and we're likely going to head up to the top of the channel. So that's how I'm going to trade it. Give it a little room. Stop out on a daily close. Let's say we close right about this area, 45.50. I'll probably just stop out. And yeah, that's just how it goes. You don't get them all. But the trade was there. It looked like a good setup, but again, they don't always work out. Sometimes it just doesn't want to do what the chart tells you. Qualcomm, again, this one, is not breaking this level of support. Right now, I'm looking for this 170, 156 level to go. So until I see a break of that, I'm not really interested in continuing to short this thing. I did take a short on it the other day, but again, when the Qs hit that support level a couple days ago, I covered all my short trades, including this one. So doesn't mean I don't think it's going to go too much higher. But I think it's likely. What I think it's likely to do is probably just backtest this trend line, chop around here, and then ultimately break. But I'm waiting for the break at this point right there at 171.20. It's an hourly close below that level. That should set us up for a move to gap fill. Do I get the opportunity to short it right at that key level? I'm not sure, because we gapped up right here, we might gap down and create an island cluster top. Okay, so right now I just don't see anything in it until we see some more price action. And Rio still looks good. Rio and these iron ore miners still look good. So today, this thing gapped down almost 2%, and the buyers just stepped in, and the buyers continue to buy this when it gaps down. So ultimately, I think we're still trending higher. Just been kind of choppy the last couple of days, gapping up, selling off, gapping down, buying up. But ultimately, bigger picture on this daily chart, looks like we're moving higher. Okay, and to wrap up, best to keep it light. It is holiday trading, so smaller position sizes I think makes sense right now. And again, just looking at that hourly chart, we're just watching for a potential rejection right here on the triple Qs at this resistance level. That's really the main thing I'm looking at. Everything else kind of looks like it's just continuing to do what it was doing. Gold moving higher, the iron miners moving higher, potential resistance right here in Qs, and that's all I see, guys. So leave me a thumbs up. Check out the stock market technical analysis course. The link is in the description below, and I'll catch you guys on the next one. Bye.